Hey everybody, what's up? We are back for the first time in a while. I'm gonna be honest, I've been very busy with college over the past few weeks and just kind of losing a little bit of motivation towards making videos because of that. Just a lot going on. But things are looking a lot clearer for the near future. I did get a job, which I'm very happy about. But let's see. I haven't really made a long video in like 3 weeks, which this is the longest gap I've had since last October. Um, so I'm gonna try to start getting back into making videos more consistently. Obviously, I want the channel to be successful, but there were just some other priorities for a few weeks there that I had to focus on. Now my last semester in college is just about over. Um, Not really much left there other than to graduate, which is awesome. And yeah, I did get hired for a job. I'm going to just be working in corporate finance, which I'm excited for. But we're going to see what happens with the channel moving forward. I don't know once I start working how much time I'm going to have to record. It's just kind of something I'm going to work out when I get to it. I'm not really sure what my setup is going to be, but we're just going to roll with it and see what happens. But updating on the portfolio over the past few weeks, I really haven't covered much at all. I was making shorts for a little while where I would just do really quick videos giving short updates about some things, a couple companies that I've been interested in. But the last update I did on my actual portfolio was just about 3 weeks ago, which doesn't sound very long when I say it, but for me, I was making multiple videos every single day for about 4 months straight. So for me, that's a pretty big gap. But anyway, that's what we're going to do today. Just take a look at the portfolio, give a little bit of an update on everything. And I think that's about it. I'm going to record a couple stock reviews today. I have the rest of the day free, mostly. So I will actually do that. And yeah, let's get into it. So, looking at the portfolio today, it looks a lot different than the last time I reviewed everything. So, first of all, stocks are way over half of the total portfolio right now, which I am probably going to start reducing, honestly. I don't really like having that much risk. Also, the last time I did a review or an update, I guess, the return on all of these ETFs was right around negative 10%. Now they're all pretty close to being positive. um, I really just bought these at a horrible time, but also there's technically some other profits in here that are rolled over from another mutual fund I had. So that probably makes me positive on these by a little bit. Um, yeah. So year to date, we're up just under 13%. Lifetime, we're up almost 15%, which is awesome. That's great. But one thing to note is that year to date, 13%, I am enormously outperforming the market at the moment. So if you look here, the market opened the year at about 5,900. We're currently at 5,500. That's a 6.5% drop. So basically the outperformance is like nearly 20% better than the way the market's performing, which for me is awesome. I think that's pretty good, and I think most people would agree. But looking into the actual stocks here, there are a few changes I made just in the past few days. Um, but there are a couple major things. So, first of all, Celsius is no longer the top stock. I honestly don't remember what I went through in my last video or when I made a lot of these changes that I did, but I have been very active in managing the portfolio over the past few weeks. So it's not like I was just ignoring it or anything. The last update I made was on the absolute bottom of the market, I believe, which, if we look, was right around April 7th or 8th, I believe, is when my last update was, right here. And that was me just buying more of every single company that I have, which is, or almost every company, which is exactly what I did. Since then, I've been buying a lot of RCAT, which is kind of one of the hotter companies that I've been looking at recently. I've been talking about them for a while. I made a ton of shorts on them, but basically their stock price moved down a lot from where their recent highs were, right around $8 a share. They dipped down actually below $5 a share for about 2 days, which I did buy, which is awesome because I think this company has a ton of potential, which again, I talk about all the time, so I'm not going to go into too much detail. But Supermicro, First Solar, Trade Desk, and PayPal are all pretty even on the top. If we look, I have a pretty decent return on First Solar at the moment. Flat on Supermicro. Trade Desk and PayPal still down. Celsius were up a lot. Same thing with Affirm, which is another recent one that I got into. RCAT, we are even mostly on, a little bit negative, but I still think the average price for this is fantastic. I believe the market cap of the company is somewhere between 3 and 400 million, if I'm not mistaken. That could be a little bit off, but I could honestly see this being a $2 to $5 billion company in a couple of years, just based on the way their revenue growth is going and kind of the progress they've been making. But still, it looks fantastic. Also, Dollar General has been thriving in the current market. I'm up 20% on them currently. And this is also after selling a portion of my holdings as well. So I did take profit there. I have also taken profit on Celsius twice now. And each time I do, it appreciates back up to my number one holding, which is pretty crazy, but that just shows how good the company's been doing recently. Also, I got rid of GMM just because the company lost like half of its value, and I only put like $80 in it originally, but I just didn't want to have another stock to check on every once in a while. And another one I sold off was Hims. I still think Hims is a great company, but I never really bought a lot of it to begin with, and I should have. And then I sold half of my already small position about 2 months ago, probably, back when they were at like $70 a share. So at the point I sold it, which was about 2 days ago, I kind of just had like $150 in there. I was up 50% on it or something. And I was like, is it really worth holding this small of a position when I'm up that much on it? And I'd rather put the money towards something else. So that's exactly what I did. I didn't directly put the money into anything specific. But yeah. Another new addition is Google. I added, which I'm up about 9% on, which is awesome. One of my larger starting positions that I've had recently, and it does look like I don't have a lot in it, but at the time when I did it, everything was crashing and I was dumping cash into my account, and that's just what I had left for Google. Which usually I don't buy mega caps. That's kind of a thing that I like to preach fairly often on the channel. Is I am not a fan of mega caps. I don't like them. I just don't really see the potential with the returns being good enough for at least me specifically investing in them. But Google is by far the most undervalued in my opinion. And it's kind of just worth doing. I can very easily see getting a 20, 30, 40% gain out of them within like a year, maybe. Um, but yeah, another one that I got into, which very similar to the Hims situation, is I did not put anywhere near enough money into SoFi. I should have put more in. I'm up 36% on it currently, which is great. But I really could have made a lot more had I put more money in. But either way, profit is profit. That's all you really need to know. So pretty solid. Um, Portfolio charting. I have been doing that a little bit. I'm going to have to figure out how to update this to include deposits because prior to this, I was not depositing anything. And now I deposited a decent amount in 20, or I shouldn't, in April. So I do have to figure out how to adjust this to include deposits, but we'll figure that out at some point. I might just stop portfolio charting because my brokerage does that for me anyway. I just did it to play around with Google Sheets. But anyway, total value is sitting at just over 24,000 at the moment. So things are looking pretty good. I think that's all I really have to cover for today. I could go into a couple of the companies, which will I do that? Probably not. I don't think I will. Looking at just to kind of highlight the way my trading strategy works, because I did gain probably 20 or 30 new subscribers since posting my last video, mostly from shorts. But the way that I normally invest is finding smaller market cap companies with really solid financials that make innovative or good products, and then I buy them. Another thing I usually look at is just where their chart is at. So some companies that have really attractive charts are Red Cat, like we saw earlier, First Solar, Dollar General, Trade Desk, especially. Companies that have fallen a lot. Could be from bad news, could be from market conditions. Like, for example, Super Microcomputer dropped a ton a few months ago because they were having an issue with the company that audits their financial statements. And there was a ton of concern over like, are they doing shady business, and that company doesn't want to be involved anymore. But at the end of the day, the whole thing was solved. There weren't any like wrongdoings or what, however you want to say it. But um, so the company's stock price got annihilated because of those sort of controversies. That's when I bought into it. So things like that, where Supermicro makes really important semiconductor products, they're very involved in that industry, um, closely related to companies like Nvidia. There's a ton of growth expected for them, and a ton of growth that has happened for them already. Um, so things like that, innovative or popular products at cheap prices, and solid financials. A really good example of this is Celsius. Energy drinks are having a massive surge recently in the past few years. They're very popular, but Celsius's stock price has been getting destroyed. And some of the reasons for that are just saturation in the industry, possible concerns over some health issues with the products. But I think basically all of those have been addressed. Celsius's stock, or I should say market cap, is very low. Not as much anymore, but when I was buying it, it was at 6 to 7 billion for their market cap. And since then, they had a massive acquisition, international expansion. A ton of things are happening that are really good. So that's a really good example of probably one of the most attractive companies for me. And then other than that, small market cap is kind of the key for me. I don't really like bigger companies. You could see, other than Google, which again is more of a swing trade for me just because they're so undervalued. The next highest company is PayPal, which is at 63 billion. After that, it drops off pretty quickly, and then 20 billion or less is the majority of my portfolio. So I guess that pretty much wraps up everything I wanted to cover. Again, I'll probably do the portfolio updates once or twice a week, depending on what's happening. But this is it for now. So thanks for watching. Subscribe if you want to, and I'll see everybody in the next video.